Good afternoon, everyone. Thank you for attending the EOTPRO Indicator Lesson School. Today, I'm going to review the Risk Profile Zero. My name is Mark Hull, and I'm a member of EOTPRO and a contributing strategist. What I did when I first came to EOTPRO was I was looking to refine my trading experience through advanced algorithms, something that was a little bit better than the old candlesticks or crossing moving averages or RSI and MACD, because I found that through, years of trial and error that, yeah, they were keeping me in the trade and I was doing okay, but, I was spending most of my time trading through the day to make up for all the losses. And it was pretty much just a flat across the board, just enough to keep me in the game. But I was frustrated that I didn't feel like I was in cutting edge. I kept searching and searching, and then I found a company that was a little bit more progressive, that took modern technology and really explored the possibility of using all these proprietary algorithms and historical returns to really enhance my ability to trade. The problem was I still had that old mentality of, well, my system worked okay, I just need something a little bit better. Well, no, my system wasn't working at all. So after about a month of trying to trade like Bill, I was destroying myself because I didn't really have a plan that fit the indicator. So I stopped. And with Shelly's help, she helped me. We went back to square one, helped me design a plan based on the indicators. What I found was what really hit me was I met with Glenn, who is the founder of EOTPRO, and he had said he was using this end of trend indicator for over 26 years, and it was very successful for him. And he had a bunch of different ways and different techniques and different mannerisms and to trade this particular indicator. And I said, wow, if it's that successful, I just need to start with one indicator and understand each one. If it's going to be on my chart, I need to know what it does. So I just blanked out my whole mind as far as, what these indicators do or my old methodology, and I started to do my homework. I took snapshots of the charts. I recorded based on, using our NinjaTrader platform. I used that to a T. I looked at maximum favorable excursion. I looked at maximum adverse excursion. I looked at account performance. I did playback. I did strategy builder. I used the tools that I had to convince me that I could find some way to make these indicators work. So I started to refine and refine and refine. And then what really set it off is when we developed, EOTPRO developed the NCEP, the neural networking. This was the straw that broke the camel's back. By taking that 10 years of proprietary algorithms of all those indicators and applying them to a simple chart and then managing the probability of success with a strength indicator, this is when I really developed the RP0 and became successful. Now, what I want to do is, before we actually get into what it is and how it works and how we use money management, I'm just going to bring over into the screen. This is the Advanced EOTPRO, and I'll walk you through this, how to get into it right now. This is the screen that we normally look at, EOTPRO's website. Now, to get into the forums, it's free for everyone. There are a few protected areas for our paying members that get specific information on, indicators and trades and whatnot. But this part is for those who are kicking the tires or for those who want to sharpen their skills and find out what's going on. This is what you do. You go into the community tab. You go into the forums. You read the disclaimer. You enter the forum. Now I'm signed in already, but you would register up in the upper right-hand corner. This all is free for you. This is what EOT is all about. So once you get in and you're signed in, there's no commitment here. This is all for your own benefits. There's Thomson Reuters recordings. There's end-of-day stocks, which is password protected, and it says so. That's for our paying members, where we do hypothetical stock and options, which are, by the way, been doing extremely well. We're up 60% since October on the options. We do indicator downloads, where everything is right here for you to actually apply to your NinjaTrader platform. We also give you instructions, learning resources about active money management using the NinjaTrader platform. Different information and videos on all the indicators are right here for you. Even some of the past lesson indicator schools are right here for you. But what's most important for us tonight is to look at here. Here's the risk profile. This is what it's all about. I simply click on it. And we're going to have some options. This is different people. Brent has done a great job, and Moody. I mean, they've added, and look at all the people. There's hundreds of people looking at this and deciding is this right for them. But Shelley even takes it one step further. So you'd go down to the Shelley's trading plan and introduction to RP0 trade. You click on that, and what's going to come up is a trading template, but also here is a PDF that Ray put together that it just blows me away. I still today got to thank him. This is just beautiful. But he took the transcripts from a conversation that Bill and I recorded together when I discovered and applied the RP0 methodology. And he took it and he actually verbalized it and also created pictures for you to look at to help, pictures like 1,000 words, right? And he put this thing together. It's like 15 pages, but it's all about the profile zero. The only thing it's not up to date. The only thing up to date is some of the numbers are different because we actually we evolved to the Summers Bars mentality. So this is still a viable option, but it's even better. And as we get better and design these other indicators to enhance the zero profile trade, the methodology is all the same. So this is something you can download and read at your leisure, and it's very well done. This guy spent a tremendous amount of time talking about the zero profile trade. All right, so I'll just move that off, and let's go right to the charts. And let's get into what the zero profile is. Hopefully everyone take the time to go ahead and do that and get registered into the forums. Okay. What I want to talk about tonight is the origins of the zero profile trade. Purpose, theory, philosophy, and even the methodology. Once we get all that out of the way, you have a better understanding. Now I'm going to help you see the light. I'm going to talk about the technicals, the win-loss ratios, some trade parameters, trade durations, how to enter the trade, how to stay in the trade as long as possible, and when to get out. And then we're going to talk about stops. Because like I always say, your best trade of the day is a trade that went bad. And you did what you could to salvage a bad trade. Because there are plenty of zero profile trades that it's a no-brainer. In fact, the hardest part about some of these zero profile trades is not getting filled on the good ones, but I'll guarantee you'll get filled on all the bad ones. And we're coming into an era where we have the technology and the people skills to apply the methodology to actually develop strategies with advanced fill technology to get us into those trades. In fact, I think we're working real hard to actually automate the zero profile strategy. So the system will get you in automatically, and you'll have the option to either run an active trade, advanced trade management through Ninja, or to use a simple indicator or a choice of indicators to actually manage the trade, based on what they provide for you. So EOTPRO is really, really working hard to make trading for you, not only you seasoned veterans, but some of the new people coming in, and apply the same methodology on this high probability trade. And when I first did the zero profile trade, I was on the ES. And I said to myself, you know, if I can't take one contract, and wasn't so much the money at first, but I really designed something and trade something that had a better than a 75% win rate, and me manage my stops or my losses to a minimum and let the runners run, then I shouldn't be trading, because I can't trade anything without that simple methodology. So I did it when the zero profile came down, and I took well over 100 synthetic trades, and I found that under this reoccurring situation, that it was very, very profitable. And when it didn't work, it was easy enough to limit my losses and to get out of the trade and wait for the next one. The problem was I was on the ES, and it was in the spring of 2010. And it was active at the time, but the trades were few and far between. Maybe 1 or 2 trades a day, maybe none. Sometimes I'd be lucky and get 3 or 4 on the ES alone. But I knew going into the summertime through past experience that there would be a contraction in range, and volatility and volume would decrease immensely. That's exactly what happened. But the system still gave me, based on one contract, enough to pay the bills. You know, I had a weekly goal of $500 a week on one product, one contract. That wasn't hard to overcome. In fact, I exceeded it even through the summer. Now, so what I did going forward, when we opened up 8 more markets, well, that gave me 8 more opportunities to capture zero profile trades. Now, the reason they only happen once, twice, maybe sometimes never per day is that it's a very high probability trade. And I'm going to try and walk you through why it happens and why there aren't that many of them. Okay? So let's think about that. Okay, now the origins, again, you pretty much got an idea. I actually stopped and listened to Glenn and said, so this is the indicator you've been working on for 26 years, and it works for you, regardless of what you do, but you use it. It's based, everything is based around the end of trend as far as the strength of the move that you're currently in. Great. So let me look at the indicator and what it does. Now, again, the zero profile trade is designed for very, very relaxed trading. It's not as aggressive as all of the indicators that are provided. The theory is, and how this works, is kind of like the ocean. And this is how I found out. I was sitting at the beach after looking at these indicators all month long, trying to figure out, well, how does the strength indicator really work? I for some reason, you know, I just can't figure it out. And I was watching a bunch of surfers. And I started playing that same game. I was looking at them, trying to figure out, well, why didn't he take that trade? I mean, why didn't he get on that wave? That's a great wave to be on. If I was surfing, I'd want to be on that wave. And then the wave would die out. It'd be a short wave. It crested fast, but it fell down. Now, me being on the beach looking at, you know, I can see a macro view of what's going on, pretty much like what you're seeing on the screen right now. I can see the waves, right? I can see them happening. But being out on the water, you have to be in the game. And what they were doing is they were actually wave counting. So they were looking at the cycles of the wave, and as the water builds up on the beach, when the water starts to recede back into the ocean, that wave gets higher. And the power of the wave breaking is a lot higher, and they can stay on that wave a lot longer. I says, OMG, this is the end of trend. And what happens is that these cycles are the strength, regardless of the direction. This is not a directional indicator. All this does is give you confidence that there's strength behind the move in whichever direction it is. Now, the red line, that's the fastest of the cycles. And it travels between 0 and 100. The blue line is a slower cycle, means it's the longer cycle of the overall trend. And when they both work in conjunction with a zero profile trade, that's the most powerful thing there is. Because now you've got the short-term and the long-term trend meeting up at a known area above 90, which means when you get above this 90-degree area, that the strength of the current trend, regardless of the direction, may be subsiding, much like the wave on the surfer. Okay? And that's where the finesse comes in. I mean, that's just the original concept of getting on that wave and riding the wave. Now, there's amateur surfers and there's professional surfers, much like amateur traders and professional traders. Some of the professional surfers can stay on that wave a lot longer than some of the amateurs. They get a quick ride and it might break a little, but sometimes that wave will continue to pick up steam and go even further. That's where the finesse of the zero profile trade, we take it to the next step. And that's, we will train you on how to do that live in the room. But for all, purposes for tonight, I'm just going to show you what it is, how to get into it, how to manage it with the new concept that we have with these indicators. All right, so let's take a couple examples here. We have to go to market open. Let me just drag this over. And okay, the market opens on the CL contract. Now, this is a very fast market, very profitable. If you don't have a trading plan already, you don't trade a fast market like this. It'll chop you up. If you go in with your advanced trade management and you have stops that are too short because you didn't take the time to figure out how much money you could actually lose on every trade, and all of a sudden you get freaked out when it goes against you and you didn't think that you would be exposed to that much risk, you're fooling yourself. Well, that's where we come in. We try and help you with that type of plan. Here's what happens. Let's look at the first one. Okay, every pre-market, I look from the hard right edge. And I should probably do that. Let's take this all the way to the edge here. Sorry if I'm making everyone dizzy. Okay, we're going to take this as it happens. This is like doing playback live. And we're going to talk about the different methodologies that we use to manage a zero profile trade. A zero profile trades can be as highly as 90% accurate. It's how you manage the trade that will make you successful. Okay, so the market opens up, and you can see this downward pressure on the oil. So all the overnight activity, at least for the hour, it was down. It catches a bid, and a couple things are happening. The strength indicator, this should have been a clue right here. The strength on the current trend to the downside was diminishing. The longer-term blue line, which is called TA, which is short for time adjusted, was rolling over, meaning that the current strength of the move to this downside was diminishing. The shorter term trend, this move right here from this NCEP 3 short, okay, it had turned over. When it does that so fast before 90, it means the current strength, again, this is the strength, not the direction, of this downward move had ended. When it breaks below 90, before it gets over 90, the strength of that move has ended. And look what happened to price. Just like that. In fact, some of the members actually use this as a trading technique for the more advanced members. Now here the price comes back up. Now we've rolled over. One thing that's happening right here that I don't like is to see when this nice cyclical action starts to get what I call sawtooth. That's indecision in the marketplace. And what I'm going to do is I'm going to draw a little rectangle here. Hopefully you can see that. From this point on, okay, that's a choppy area, okay. Failed to go higher, broke lower, broke higher, now it's a higher low. Okay, but the indicator is showing indecisiveness in the marketplace. We already know the longer cycle has diminished. Now it's trying to regroup. Meaning it could be consolidating. It could be forming a congestion zone right here. But regardless, the zero profile trade is a trade that breaks out of consolidation. So the downward trend appears to have been over based on a higher high. Now we're coming into a low like this. Okay, now watch what happens as we go further. This would qualify as a zero profile trade because, again, we're trading in congestion. The indicators are both below 25, meaning there is no strength in the move. The prior stops I had been using because this yellow line is new, and I'll explain what that means later, was the prior plot point. So in my mind, I'm calculating at 102.27 was the high of this current move. The entry point would have been on the zero profile trade would try and be to go short at 101.96. So let's see what happens. Let's assume we got filled at 109.96. Immediately what happened is got in the trade and it went against you. Okay, this is all part of trading. Now again, my stop would have been up here, the old methodology at 102.27. Okay, and we'll talk about this yellow line in a minute. Just follow with me on this. Okay, you can see we were getting some two-sided action here. We came back down to not even a break even. Okay, again, my stop is up here at 102.29. And the reason I used that was that I knew that there was selling pressure at that plot point. That's what we call a plot cycle point, those green dots that form once the move is already, moved away from that. Unfortunately, we can't trade those, which we could. So right now there's pressure against me on this trade. That's telling me that I am trading still within that chop. It's an undecided area. Now what the trend indicator, the strength of the current trend, this does not bode well for me. Now it's telling me that the zero profile trade, which is failing as price is going up, the current strength indicator is showing me that this upward price movement has more strength than the downward price movement. So let's take it further. Okay, right there I would have been stopped out. And look at the strength of the current trend to the upside. This is a stop, and it's a pretty darn big stop, okay, using prior resistance points. What we've done in the past was to use a hook of ID in this direction. If it hooks up, and that would have been right at the end of this bar, right before the plot point, there's another exit strategy. Would have saved you 3 ticks. Big deal. What we've come up with now is this volume splitter. And this volume splitter, this yellow line, is the delta, the change within small, medium, and large contracts. So if we take the delta, and right now you can see these numbers down here, the delta it was negative coming into this, and I can expand on that, I think. Oh, we don't want that. Okay, now you can see the numbers. Here's the trade. See the delta on this particular indicator was red, meaning that there was a majority of contracts short. Unfortunately, if we would have got into this, it only went 3 ticks in our favor. But immediately, the bar after this, the delta changed to positive. And then the preceding bar then was going up with a positive delta. This is an enhanced stop that we've come to terms with that is superior to anything I used in the past. And that's why what you'll see in the PDF and also some of the conversations in the forum, this is an enhanced, what we found a better way to mitigate our losses. So now when we saw this bar start to come against us, and what happened was we had an opportunity, just like Bill's been doing lately in the room, this bar comes against us, he goes right up against the market for a stop. And let me move this down just a little so we can see. Okay, and he had the opportunity to probably capture all the way down to 102.8. And our entry down here would have been, 96. So right there, instead of waiting to go all the way to the plot point or a hook of our strength indicator to tell us what we already know, is that there's strength in the up move. This new volume indicator, this what we call the volume splitter, is a superior money management tool to manage the zero profile trade. It's going to minimize the old proven methodology of being exposed to that much pressure to the upside, waiting to see if we actually fail and then come back to the downside. Our goal at EOT Pro is to keep you in the game as long as possible. So if we can mitigate your losses and then show you how to let your runners run, you're going to be in the game a lot longer. So that's how we control a bad scenario, okay? That was a losing trade. But using this new technique right here,
Euro-dollar trade.
You could have minimized your losses tremendously instead of, anywhere from 102.12 to 102.8 instead of being up to 102.29. I've just cut your losses in half. That to me really intrigued me. So that's how we control that. Let's remove that. We don't need that on the chart. And one loser for the day. And go ahead, I'm going to go ahead and put this down. One loser. And let's go on, let's see what we did. And it was for a minimal stop. And then let's find the next zero profile trade. Okay, the next NCEP was a winner, but it did not qualify for zero profile. And that's all I'm looking for here are the zero profile qualified trades. Now you can see we're already an hour into the game and there aren't any zero profile trades. So if you have that Class A type personality, if you feel the need to be pushing the button all day, this is not one of those trades. This is a higher probability trade and means that there's not as much action for this to happen. So we get this big run to the downside. You can see how TA, the slower of the two cycle indicators, has now come back and diminished, just like the prior one. All right? And the current move up, right here, this move up is indicated by the strength of the red ID line. Volume splitter was hooking over as price went up to this plot point. And then look what happened. We're below 25 again, aren't we? And what did we just do? Here we are again. Must be the AMD chip I'm using. Okay, let me get that one, put that in there for us. Okay. Here we are trading in that chop again, aren't we? Came down to a low, and generally what happens, specifically in this market, when you get a big move down and buying steps back in, this is where two-sided trading is. The market's still undecided. Is it going to go lower? Is it going to continue in the direction of the overall trend on the day? Or is it going to find buying interest? Are they going to step back in and then take this on a counter trend trade? Well, the zero profile trade says, no, if you're going to stay in the play, and you know that through the stats that you've been taking, that the majority of the time, over 90% of the time, the zero profile trade is profitable. So you get into the trade here, and it would have fired off at 100.69. It's qualified because both strength indicators are down here while the market is congesting or trying to find or determine if it's going to break up or out of this area. That's where the trade lies. Is there enough strength for this to break out after coming down a big hard run like this? Or is it going to congest, come back here, double bottom, and return back up to the upside? Now what you can see is you're in this trade and it's going with you. The best thing you want to see is one, volume continue down. That's a good sign. And look at ID. This is the faster of the two trend strength indicators. It's hooking up as price is going down. That should be confirming to you that there is strength in the current direction to the downside. So let's take it further. Let's see what happens. Holy smokes, was it right? It's going up as price is going down. You want to stay long or stay short this trade. Okay? You see how ID now is getting close to 90. And price is now coming back against you. This is where you want to start to make sure that you're locking in some profits. Okay, you never want to get a trade get this far. It broke to new lows, and there's some buying interest stepping back in. And right there, you can see a little deviation in that little part of the volume splitter. Okay, there, that's easier to see. You see how that positive bid's coming in? Now let's keep an eye on ID and take it further. There. Okay, volume is hooking up and ID hit 90. That should be your first clue to start bringing your profit stop down. Don't let a good trade get away from you, because it's telling you that the current strength of the current trend to the downside may be coming to an end. All right, so you just be bringing it down. This is where you're just going to have to either use an advanced trade management with NinjaTrader, which would probably have already gotten you out somewhere around 46. So that, right there, that's a $200 per contract trade. Okay, or you're going to finesse it, and that's just from years. It's already been months of watching how the strength indicator works. So you start bringing it down, and you're waiting for the market to turn. Okay, Bill probably would have been right in here about 100.55 on an exit strategy, or getting ready to bring it down with this trade. So let's see how it transgresses. Okay, there. So Bill would have brought it down. I would have been bringing mine down. Price goes against you, even though the volume splitter is going up. This is how you get the best bang for your buck here. The volume splitter will go up because it's a moving average of the delta. All right, let's continue on and see what happens. Now you see TA. This is a longer trend indicator. So as it starts to rise, it means the current overall trend may be continuing to the downside. So now we're definitely, our stops are down here. Okay, we're really starting to bring it closer and closer. Look, price continues to go down. ID, the slower of the two cycle indicators, is starting to point up. ID is now above 90. It's at 99.12, and basing, this is a good thing. Start bringing your stop down a little bit more. It's going lower.
Silver trade.
Look at that. Now it's really down here. TA, the slower one, is now starting to pick up. It means there is strength in the current trend of the downside, even on a larger scale. Now you may or may not be out of the trade by now, but you can see the volume splitter is actually starting to hook back down to the downside. So now maybe you have brought it down. Maybe you're at 100.50. Let's see what happens. Okay, it still didn't take you out. It's still going to the downside as TA. The slower one is picking up. That means there's a lot of strength building up to the downside. This wave has still more to go. Okay, now look, we're starting to catch a positive bid. It's coming back against you. Let's see how long we can stay in the trade. Now, notice what's happening. Volume splitter is continuing to go up, meaning the average of the delta is increasing to the upside. ID from this point on, 1052.34, is now decreased. It's going over. We're no longer at this 99 area. Now it's 94.1. So the current strength in the trend of the downside is diminishing even on a lower time frame. The TA at this point has failed to get above 25. Okay, let's take it further. Boom. Look how sharply it broke through 90. Okay, if you were trailing your stop down here, you had all this area, and this is up to you as a trader how to finesse this trade, but you had from anywhere from 1044 down to 1032 to lock in additional gains before the strength indicator, the ID, was actually telling you that this current move is diminished. Not to say it can't go further, and we'll find out, but this current move is down. So you would have got in right here about 69, and you had, all but you could have got $300 per contract out of that. All right, that's a pretty good risk to reward, figuring you got in at 69 and up here at 99. That was almost a 1-to-1 risk ratio between getting stopped out from the plot point, which we don't do anymore, and how this thing ran. So let's continue on. Let's see how this second indicator, this second strength indicator actually played out. Okay, price is going up, bids are getting positive. ID and TA are now still below 25 now. So now it's kind of reset itself. Now we're trading back in, look at this. Let's move out of this congested area. Oop, going too far. Okay, now we're trading right back into this congested area, right? We're going sideways from 1049. You're trying to find value. All right, it's reset itself. It's telling you that now the ID and TA are below 25. It's reset itself for another zero profile trade. Okay, the market is trading in indecision, two-sided action. Was this the bottom? We don't know. Okay, now see what happened? Buying interest came back into the marketplace, and we're still trading down here. And boom, we're at the top of this congested area. So again, here's what happened. The volume splitter was a great money management tool. It gave you the opportunity to start bringing your stop down, and you would have been stopped out somewhere in this 50 to 49 area, capturing a good $200 per tick. ID was also, it finally rolled over on this bar. Look where it rolled over, 100.47. So somewhere between those two indicators, you could have finessed out a couple more ticks. But isn't this a great way to know that once you're in a trade, if the volume indicator is with the trade, you stay in it until it tells you differently. And consequently, if you're in a trade and ID is trading up above 90, you stay in the trade. Now sometimes, and I'll try and find some today, that there's a little abnormality. One will trump the other. So one is going to be a little bit more aggressive than the other. And then you simply, based on your trading plan, take profits or limit your losses based on the interaction between those two. Okay, so that's another winner. So we're 1 for 1 for the day. And we took, I think, a 12-tick loss on the first one, about somewhere like that. And we captured at least 20 ticks on the second one. So you're up $100 per contract. Okay, let's go forward. No incept signal. Shame. Would like to have bought in that one, right? Okay, here's one. This is a good example of a failed. Now, it didn't fire off this is a little thing that we need to work on with James. You did get the yellow chevrons, but this was an NCEP 2.5. Now, this might be unique to my particular system. Why it fired off, I'm not sure myself. But what happened? It was zero profile qualified. ID came up to 25 and failed on the preceding bar, didn't it? Started coming against us. So your exit would have been on the ID alone, it would have been 101.8. Your entry would have been 101.15. 7 ticks because ID failed, and also the same thing, volume failed at the same time. So let's mark that as a loser. Okay, another loser for our -7 ticks. All right, let's take it further. That's a failed trade by using the new methodology. Okay, using the old plot point methodology, we never broke that. But, I've done my stats. Plot points used to work. And they still do. But I don't need to take that much heat. It's easier for me to make up some of these smaller losses based on a 7-tick loss than it is to stay in the trade to find out, oh, geez, I'm 30 ticks in the hole. Okay, so that ended up being a winning trade. But, again, it's easier to come back from a 7-tick loss because what just happened? Look, we're in this trade again. This is another zero profile trade. Fired off at 23. ID is now aggressively above 25. And volume splitter is pointing up. Even though the price is coming against us, this is okay. All right? Here's your hook. Okay? To use the better of two systems. When this bar fired off on the hook, it was at the top of this bar here. So it's 101.13. Now, what I generally do is if the price is moving up and volume splitter is moving up, even though ID is rolling over, if it's on the top of the bar in the direction of the current movement, I usually stay long the stock. I'll take that heat. This is where a little bit of finessing the trade comes in. It's hard to tell a computer how to do this. Now, here is definitely an NCEP 3 to go short. These are conflicting, aren't they? So we're going to say that we took a loss on that. 14.23, that's -9. Okay. Now, we're not even going to look at, I haven't even done any stats on the NCEP3 and the zero profile trade. Feel free to work on that on your own. So that would have gotten us out of that trade for sure. Now look again. Here's another zero profile trade. Are we trading in chop or what? The market is really out of control. This is why the volume splitter has really improved my ability to limit my losses. Okay, we're long at 101.23. Let's see what happens. No reason to get out. Everything looks up, right? It's up, up, up. Still no reason. Look at TA. Now look how aggressive TA is going up because the overall trend is up. We broke out of this congested area, which is what the zero profile is all about. We're going to get losers, but we mitigate the losses by using this volume splitter, and we let the runners run. As long as this volume splitter is going up and ID and TA are going up together, we're going to stay long this trade. Okay, now you see here's the volume splitter starting to hook over a little, right? ID's above 90. Okay, you want to use the better of the two worlds. Okay, better of the two indicators. TA is coming up. Generally, when ID and TA meet above 90, that would signal an end of the trend. Let's take it further. Okay, look at where we are. Came down a little bit. That's all right. Nothing's telling us to get out. Everything's still pointing up. Okay, now ID and TA are starting to move up around 90. And on this bar, after rejecting this area for a second time at 101.36, I'm definitely moving my stop up. I'm going to at least get up to around here to this 101.34 area and lock in some profits because the strength may be coming to an end. Okay, look what's happening. Volume splitter is keeping us in the trade. Still no reason to get out. All this means is when ID and TA are above 90 is that the current trend might be subsiding, not to say it can't go higher. Now the volume splitter's in control. I'm going to use a volume splitter to get me out of the trade because I already know that there is tremendous strength to the upside. Okay, no reason to get out there. Look at the hook of the volume splitter. I want to be out of this trade. Okay, 101.63. You got in at, I keep having to move this thing, 101.23. So that's 40 points. So one winner plus 40. Okay, so we're, I don't know, someone do the math. I'll do it when we finish here. That is an exit. That's a phenomenal trade. You see how we mitigated losses back here, and we let the runners run based on the current trend. This volume splitter, not only did it keep us back here in congestion at minimizing the losses, but it kept us in this run longer, and we caught it. And now what Bill would be doing is he'd be moving his stop right up against the market here, 101.63. Let's see where it takes us. Okay, we're out. And you can see at the same time, ID rolled over. So in this scenario, why wait for ID to tell me on the shorter term strength indicator that the move is over when I have a superior exit tool by bringing my stop up to the market, just like Bill does at 101.63. It saved us 10 ticks of profit. So that's an excellent, excellent methodology. We have to thank Bill for that. Okay, so let the market go through its motions here. And we've only got 15 minutes left. So I'm going to scroll through here and find all the zero profile trades. Let's just keep stats on them. Okay, nothing, nothing, nothing. Forget the incept. Okay, here's one that fired off. Okay, let's see what this did for us. We're short at 41. ID is going up. No reason to get out of the trade. ID hooks right here at the top of this bar, and volume splitter is definitely pointed up too. Okay, so that's 3 ticks. We're out, plus 3. Now again, for those who use an ATM, you would have captured a lot more profits because you had all this room down here to play with. But sometimes you have to let the winners run, because look what ended up happening. You know, unfortunately, it didn't pull it back enough, but it came back as volume increased and ID rolled over. It ended up being a pretty darn good trade in the long run, but we don't trade like that. You know, we try and capture what we can. The market was coming against us, and we simply exited the trade. So let's move on, see what else we can do with this. Okay, those are incept 3s, which are excellent signals, by the way. If you keep stats on that, you're going to have a lot of fun with that one. Okay, here's an incept 0. This one, now the chevron is yellow. Hopefully you can see the line here. All right. This one, I guess we're going to have to call this a loss. We'd be in here at 94. ID came off. This move right here was an indication. Actually, ID, see how ID was going up as price came up to this area and then subsequently rolled over. ID failed to take the strength to the upside. All this was like absorbed, all this area from here. So on this profile 0, if you could have gotten in at 94, you know, you got 7 ticks of profit in that one. But it came up against us right here at the top of this bar. Now, it's hard to say if we would have taken a full loss on it, but what happened is, one, you didn't see ID take off. Okay, there was no strength in the current rejection. As this price went up, ID was not lifting. Okay, meaning that there is no strength in this little pullback here. But the volume, if we're still using the volume splitter and we're disciplined to how we use it, we'd probably be bringing our stops back down tight to the market. And it was a judgment call. It could have been 1 tick. That was a 1 tick difference of keeping you in this trade. I'm going to call it a loss, but look what actually ended up happening. It actually rolled back over. That was a real close call, but hey, losers are losers, and let's call it the way it is, even though it was 1 tick. 99.11, and let's call 4. So that's minus 15 ticks. Ultra violent day, but I guarantee it's going to be profitable in the long run. Okay, so here we are trading, going along. I don't know why that one didn't fire off. I don't think that one is on anyone else's charts. So I'm not going to count that one. That's something that's unique to me. All right, nothing there. Again, that one isn't either. It's these chevrons I'm looking at. Okay, so here we have another one. Short it at 35. It's going down. Strength indicator is going up. That's good. Volume started to hook right here. So again, Bill would have been bringing it down. We're going to call this a scratch trade. Only because we got up to this area, he would have been bringing his stop down, his stop loss. His volume was going up. It got down here to 29, but finally came back here and went against him. So he may have salvaged a break even plus 1 or 2 out of it. Let's call that a scratch. Okay, let's just call it a scratch. Call it a win plus 0. Okay, so now it's noontime. You know how I feel about trading noon. You shouldn't even be counting these, but I don't trade from 11:30 on to 1:30. Okay, so now we're looking for some more 0 profiles. And here's one. All right, this one fires off. Everything is going down. I'm going to show you how to finesse this one. Was a pretty cool trade. All right, we're in at 62. Indicators are below 25. They both take off as this thing is just pushing down hard. All right, we get down here. Volume starts going up. Okay, as ID and TA tag. This is where I start to manipulate my stop if I haven't done so already through my advanced trade management. So I start bringing my stop down. I'm looking for a point where the market wants to stop as it starts to roll over. Now, what I'm doing is I'm trying to work with the house money. I'm already profitable from 62 down to 46. And that's the point in time where this came up. We had positive bid action, but ID and TA are still above 90. I'm going to try and stay in this trade as long as possible until I break below this 90 mark. All right, but you have to watch it. Okay, ID did hook here, but it was as price was going down. So now price and ID trump the volume splitter. The volume splitter is, again, a moving average of the delta. So you'll get that little anomaly. It'll go up sometimes. This is where you finesse the trade. You stay in the trade until it finally breaks, and that would be down here, ID breaking again at the top of this bar. Or you could wait And it's, if you were to even stay longer and use a volume splitter, you would have gotten out. But let's just book this one at a break of that. And let's say we got out at 99.08. Is that fair? No, probably not. Now that I'm looking at it, it came up against us. We got a hook on the bottom of this bar. Nope, according to my plans, as long as the price is still negative, I'm bringing my stop down. And the stop, the close of the prior bar is what I use. So if this bar didn't close above here on a hook, I'm still in the trade. None of these bars closed above the prior bar as, you know, as the conditions allowed for itself. So now the trade's still going on. Oh, look, there's strength in the current trend of the downside. TA, the slower one, says stay in the trade. We've got more room to the downside. Okay, I'm still in the trade. Okay, look what happened. Volume splitter goes up. ID hooks, and then the next bar we actually get an ends up arrow to go up. So that you're definitely out of the trade by then. So 95 and 63.
Japanese yen trade.
68 points or ticks. So now we're up 68. Okay, and let's see what else we got. Next zero profile. That one is not a zero profile. Well, you know, it is. It did meet it. It was just on the hair there. So let's count that one. Okay, we're in at 99.38. The next bar volume goes up. ID is not hooking. So there's your, okay, there's your exit actually. It came down here. It was flatlining. And it came right up against you. So that one was a 2-tick stop. Loser, -2. And then a subsequent one. Here's another one. Okay, but look at this. The volume is not coming against you on this one. But ID isn't going up. So if ID is not telling you that there's current strength in the downside, and then you get a hook to go up here, now we're going to take a loss. All right, so 38 and 28. We just lost 10. Getting really chopped up today. This is not normal. And then another, this is a zero profile trade here. Okay, we're in. Everything looks great, right? Now, how you exit here is two ways. Volume splitter, trumped, okay, got you out a little bit faster because TA was lagging, telling you the current trend is not being supported by the longer term trend. So you're going to take the better of the two exits. So we're going to get out here at 67 and 46. So that's 19, right? 19 ticks. So that's how simple this can be. Okay, next one. Here's another one. Volume, same thing. We're in, we're out. Okay, 51. We're going to call this a loser. We're going to call that -9. I'm going quick, but I mean, it should be this easy. Here's another one. 56 long, and we're out at 96, +40. You see how easy, I mean, and I can just scroll through here and you can just see how easy this is just to use this indicator. Okay, we're going, and here we go. Here's a short. ID's going up. It hooked right here. And his volume was starting to hook up over here. So let's call that a loss. 99.05, 7 ticks, lost 7. And when 13:52, okay, almost 2 o'clock. Let's look for the next one. Oh, those are 3.0s. Nice trades. Nope, that's not one. That's not one. Okay, zero profile trade. As long as the volume was pointing down, we're still in the trade, even though ID didn't show us that there was strength in the current trend to the downside. So we're still short from 79. And volume started to hook up at the top of this bar. So that's +6. Because the volume splitter outweighed the ID. Okay, so that one, and then this one, again, we're trading congestion, expect some losses. I don't know why this one fired. I don't think that is right. This one here, 76, volume is going sideways, hooked up on this bar. So let's call that minus 11. All right, and then, no, that one is unique to mine trading. Okay, so that's it. Now let's see what we had. 1, 2, 3, 4, 5, 6, 7, 8, 9 losers, and 1, 2, 3, 4, 5, 6, 7 winners. Doesn't sound so good, does it? Almost like a flip of the coin. But let's look at the difference. Of the winners, we had 59, 69, 79, 85, 125, 128, 128 and sixes, 196 ticks to the positive. And the losers, 9, 21, 28, 37, 52, 54, 64, 71, 82. Okay? And that would give us 114 ticks to the good today. Is that active enough trading for you Class A type personalities? That's nothing more than a flip of the coin. Okay? 9 losers, more losers than winners, but we mitigated our loss, didn't we? And this is an abnormal day. The other day we had 13 trades. We had 12 winners and 1 loser for $3,200 in premium. Here, if you would have captured every trade, you still would have made $1,140. That's the zero profile trade. So that concludes the presentation on the zero profile trade. If Bill would like to come in and ask any questions, now is the time.
Thank you very much, Mark. I don't think you made enough money.
I giggled my way to success. Some of those losers I wouldn't have taken during lunchtime, but it was a very good day.
Mark, say you're in NQ or YM and any of the other smaller dollar value markets besides CL or SI. Would you wait until the change of the Bonnie's bar, or do you still get out of the trade if the volume splitter hooks against you anyway? Many times it gets you out of a winning trade you waited forever for, and then it continues in the winning direction. Please tell me what you do with the other markets that are less pricey than CL. Regards, Barb.
First of all, it has nothing to do with price. It has nothing to do with Bonnie's bars. The methodology is the same for every single market. And there will be trades that get away from you. The whole idea is the strength of the current move using NCEPT. NCEPT is the edge in the marketplace that you have to utilize. This is your tool. This is what's going to give you priority over anyone else. But how you manage that signal is priority. And by using the volume splitter and the strength indicator, which is your end of trend ID and TA, I just showed you how to mitigate your losses almost 3 to 1 by keeping your losses short and letting your runners run. So it's the probability of success based on the stats that I've taken over the months of watching the zero profile trade. I don't care what product you're in. The 6E today had 6 trades, 5 winners and 1 loser. And that 1 loser was a very small loser. So no, it doesn't matter.
Mark, what does the delta mean? And also we have another question as to what is the added criteria for the risk profile trade, zero trade? Well, I'll let you answer both of those.
Right, the delta. What delta means? Delta is change, right? The Greek acronym for change. In this particular scenario, the delta is the change in contracts. You have small, medium, and large, and we take a total of them, and they're either going to be positive or negative. The delta is the change from bar to bar, meaning the difference in the amount of contracts long or short. And that is also smooth in an average to plot on that yellow line that you see. So that's a moving average of the change in the amount of contracts from bar to bar. Now the other question?
What is the added criteria to make these signals that I trade a risk profile 0?
Well, the criteria is, first of all, you have an incept arrow. The incept arrow will trigger a zero profile trade when both ID and TA are plotting below the 25, meaning that there is no strength in any movement right now. Because what we're looking for is ID and TA to move out of 25 toward 90 in the direction of the arrow to give us confidence that the strength of the current move is appropriate.
You also use market internals, do you not?
Yes, I look at market internals. I like to be long the market when the market is long. You know, that is a discretionary type trading that enhances my ability to be right the market.
What is your opinion in that market internals is really for the longer term trend, and you earlier said that your trades were 36 seconds long? Do you think market internals really have an effect on a 36 second long trade?
Absolutely. If the overall trend is down, why are you bucking the trend? Why do you trade against the trend? That would be a counter trend trade, and if you take your stats on the counter trend trades, their probabilities of success are diminished. Trend trades is what we're all about. We want to be in the strength of the current trend is where we make the most money. So if the trend is up and you have an incept to go long and it qualifies as a zero profile trade, your probability of success is enhanced tremendously.
Will EOTPRO be able to automate Mark's VS3 ID and TA into an exit strategy? We'll try, Don. We'll try. It's not as easy as you think, you know.
No, it's not. We've been trying for months. We're pretty darn close, but it's very difficult.
The entries are pretty easy and pretty straightforward to automate.
Yes.
So we'll be automating the risk profile 0 entry and marking them with a yellow arrow, as you see here on Mark's chart. And so, you know, it's really important to show you the losses, and I mean, let's all face it, people, the market is very, very choppy, and it would be great to show you all winning trades, but I'm glad Mark went through some losing ones and went through the day, because this market is very tough, so he did a great job.
Today was a very tough day. We don't have losses like this normally. This is a 90% win rate. When I have a system that's actually has more losers than winners, and we're making money, sign me up. Sign me up. It's all about staying in the game, and this system does it for you. Even that we had more losers, if you stay in the game and stay to the plan and absorb small losses and let your winners run based on the strength indicators, you're gonna win. And the numbers are there. That's $1,000 day, and you lost more than you won. That's amazing. But today was a very rare day as far as losers to winners. Normally, like the other day we had, it was a $3,200 day. It was 12 winners, 1 loser.
So, didn't you show me some statistics a while ago about the volume splitter 3 exit as compared to the end of trend ID exit? What happened with that?
I will show you.
Who wins?
Profile results.
Who wins the volume
This
splitter?
is 5-5. Okay. This is on 5-5, and everyone take a screenshot of this if you'd like. This is all the zero profiles trades for that day. Long, short 105, long 102. Okay, shows you winners, losers. Here's the P&L. Oh, I'm sorry, Bill. We had 2 losers. We lost 8 ticks. I was wrong. We made $3,200 and we lost 8 ticks that day. Or $3,100. Sorry, I can't do my math. But here is the maximum adverse excursion from your entry and maximum favorable excursion that shows you the total amount of movement within that particular entry. This is where ID hooked at 105.12, and here's the volume splitter at 105.12. That was a scratch. So both of those worked. Where I put in bold is where each trade, one superseded the other. And you see the difference, the actual delta between using ID over VS volume splitter 3. Okay?
So who
So by
wins?
using ID hook, you had less trades winning, but it ran for a lot more. You had almost a $1.50 difference. Would have been $1,500 difference. Versus using the volume splitter hook, which actually performed better, but it didn't keep you in the trade longer. So that's where one works better than the other, and you have to look at that to really finesse the trade. Either way, here's the P&L based on the better of the two indicators, which one is telling you what when it appears. So if you would have stayed in long, and under those conditions I just showed you, when ID hooked the best, it kept you in a little bit longer, 43 ticks longer in this case, 86 ticks here. But all these other ones is where the volume splitter got you out early, and it's all about mitigating your risk. So overall, this was on the 5th. We had 12 winners. 12 winners and 13 winners and 2 losers. It was. I'm sorry. But it was still, if you stayed to the plan, just what we went through, what I just recorded, that was a $3,130 day on one contract. Today, same thing. Well, we had a tremendous amount of losers, but we kept ourselves short to the loss and long to the profit, and it still would have been $1,100 profit. That's the beautiful thing about the zero profile trade and the intergate by using both the ID hook and the VSP3.
That's very interesting. So then basically looking at the statistics on this day, the volume splitter 3, well, what we're seeing here is a much more scalpy exit. Yes. With the volume splitter 3.
Right. But I'll scalp my way to success every day. I mean, it's still a viable option. Right now, for even people who are starting out, if you don't have the finesse yet of how to use the trend indicator to its fullest, there's nothing wrong with taking profits here. I mean, the entry on this, like this first one where ID hooked better, that's still paid for the trade. So it's about keeping you in the trade as long as possible. And this is why you have to just keep coming back to the room and just hearing us talk about how end of trend and ID work. The strength of the current trend will sometimes outweigh the volume splitter. But the volume splitter, there'll be times where it keeps you from losing more than waiting on a longer cyclical indicator. So there's a trade-off, and you have to use them both in tandem, in my opinion.
Well, that's very interesting. So then, how would you go ahead and program into the computer how to exit via the end of trend in conjunction with the volume splitter 3? Go ahead and give me your interpretation as to how you would tell the computer to do that.
I would say to the computer, if end of trend is above 25, and for every additional bar stays positive from the prior bar, that you stay in that trade even if volume comes against you. The volume delta. As long as the strength indicator is in the same movement of the trade, it's going to take precedence over the volume splitter. Once ID gets above 90, signaling that the end of the trend is near, volume splitter then takes over where ID is, unless TA is breaking 25 and following ID to the long side. This is where you'll capture more premium. So under those conditions, because again, we're trying, think of it as the wave. We're trying to catch the wave. Sometimes you get up to the top of the wave on your surfboard and you're able to dig back down in there. Doesn't that normally happen? Get a nice big run, and both ID and TA are now following each other. Even the slower of the two indicators are rising. Even though the volume splitter delta is coming against you, that's just the moving average of the delta of contracts. There might be some profit taking there, but then the continuation of the selling pressure on a short will continue to the downside. If it doesn't, it's going to tell you that because ID is going to break 90, right? ID breaks 90, the move is over. And it just confirming that, okay, the volume splitter it was still pointing up. So ID trumped volume splitter in that scenario. And I know that this is difficult because there's like 3 or 4 different scenarios where one trumps the other, and it has to be written in. And it's going to be a monumental task to get it done. That's why we can get you into the trade, but to manage it, which one trumps the other, might be a little bit challenging. In fact, even for those who don't want to use the indicator, simply getting into the trade and using an advanced trade management system is going to profit as well.
Okay, let's move on to some other questions then. Okay, can you tell us about what do you use for the internals? And then there's a bunch of comments on the. Well, we'll do one thing at a time. What do you use for the internals?
All right, internals that's not EOTPRO. Those are simply figures that I get on my Thinkorswim platform. It's the up volume to down volume on the New York Stock Exchange. It just gives me a ratio, and it's plotted as a candle.
Silver trade.
And there's a zero line. If it's above zero, it's positive volume to the upside on a ratio, and just the opposite. If it's below, then the market's negative. And I use that in conjunction with the advanced decline line ratio. If the market's positive, I want to see both sides above zero and going up. That's as simple as it gets.
How do you set the strategy to only filter risk profile 0? Right, you can't do that right now, but we're going to be doing that within the next day or two for everybody. So, believe me, I know there's going to be a lot of demand after this webinar, so we'll make it happen for you. Okay, we've been going for an hour and 15 minutes, and I think that we're good. Mark?
Well, thank you both. Hey, thanks everyone for attending. I enjoy this. I mean, it's definitely done a lot for me. Just methodology is definitely, it's profitable. You can see that right now. Today, I think, was a phenomenal day to show you what this is all about. We actually had more losers than winners and made a ton of money using one contract. So, I just hope everyone can use this. I mean, you can look at the different markets. Don't get all excited about yellow chevrons. Watch what happens with ID and TA when NCEP fires off, and get used to those two indicators, the red line, the blue line, and the volume splitter. And I developed a trading methodology that works great for me, and try it on a different market. Like earlier today, the 6E was 6-1. For those who want something a little bit slower to work with, try the 6E, try the NASDAQ. Those are great markets to trade.
Thanks, Mark.
Thank you, Bill.